I'm John Batchelor. My colleague and co-host, Thaddeus McCotter, WJR, joins, and we're headed to Seoul, South Korea, where Gordon Chang, a Forbes.com contributor, is traveling. We are, however, not watching Detroit. We're not watching Seoul. We're not even watching New York. We're watching Shanghai, where the composite index, this is the FA stock market of China, fell 8.5% and the last hour of trading in the last trading session. I'm told by my colleague, Mr. Chang, that it is not opened as of this morning, but we've seen European stocks across the board, Germany, France, and Britain, respond to this failure of the intervention of the main Chinese government over these last weeks to prop up a stock market. We've seen European stocks react. We saw New York stocks react. I'm told that in early trading in Asia, there's caution. The dollar's also off. So there's worldwide roiling of the markets. The puzzle here is, how do worldwide markets connect to Shanghai? Because over these last weeks, I've been assured that this is a very small market. It's a matter of prestige for the communist government, but not profoundly wired in like the U.S. housing market. Gordon, a very good morning to you in Seoul. All eyes on Shanghai Composite. How did they fail, Gordon? They intervened. They created credit. They made sure the stock market was buoyed by shadow banking from the brokerage firms. They demanded that people stop trading or stop short selling. They insisted that everybody with 5% of a company buy stocks only and not sell them. And then they took half the stocks off the board for a number of weeks, and it seemed to have stabilized. And then, good morning to you, Gordon.
Well, good evening, John and Thaddeus. And the answer, John, is I don't know. I mean, I am actually shocked that the market fell yesterday in light of all the measures that you just detailed. I had assumed, along with about just everybody else on this planet, including China's stock market investors, that essentially Beijing would stay in and make sure share prices stayed high. But what happened yesterday was a rumor that the Chinese state entity that had been really funding margin loans had actually started repaying loans back to state banks, and therefore, essentially, Beijing was reducing its support to the market. Well, it doesn't matter whether the rumor is true or not, and I actually don't know the truth of the rumor, but the point is, stock market investors panicked. And this really shows one important point, and that is, yes, Beijing can affect stock market values, but there is no exit strategy, because every time they try to exit, people are going to head out of the markets.
Yes, it's called moral hazard. Thaddeus?
Gordon, I understand your shock at this, but what would the rationale of the people who are withdrawing the money be to actually think that the Chinese communist regime was going to pull out of the market?
Well, I think the answer is that people are panicking, and they're not thinking rationally. I mean, that's the way markets work, especially when people's investments are frozen. And that's essentially what Beijing did. It froze people's investments so they couldn't withdraw. And so people have, I think, rationally said, okay, the first moment I can get my money out, I'm going to take it. And anytime I hear anything which is negative, I'm going to head for the door. And that's exactly what happened. It's in a way, it's panic, but in a way also it's rational, that the first time you get an opportunity to exit, you take it.
Gordon, the central government has made its support of the stock market part of the prestige of China. This is the Communist Party expressing its authority after what you'd have to say weeks of propaganda promoting its plans for all of Eurasia, the UFA conference. And the big boss, the president, is due in September to Washington. We're into a slow trading period anyway in August. Is the central government now required to save this stock market, Gordon? Have they put themselves in a bind here where they can't let it fall and yet they can't control it?
That's absolutely right, John. That is their predicament. You know, they can affect stock market values, as I said, but they cannot affect an orderly exit. Because every time that they try to withdraw their support and involvement in the market, people are going to use that as an opportunity to pull out their own money. And so, essentially, the real issue here, John, is that there is a failure of confidence in the Chinese central government. People can see what's actually happening in the economy. It didn't grow 7.6% 2.0% in the first and second quarters of this year, as Beijing claims. It's more like 1 or 2% if it's growing at all. When we start looking at electricity consumption, construction starts, trade volume, all of these numbers really point to an economy that could very well be getting smaller at this moment. People understand that, and so what they're doing is they're just trying to reduce their exposure to a situation that could easily get out of control from Beijing, and that's why people are disinvesting.
I want to press my point here, Gordon. Xi Jinping cannot let this market fail. That's his prestige to his own party, right? This is now his problem.
This is the legitimacy of the Communist Party is at stake. And if this market falls, John, then the legitimacy of the party is in doubt. And that's why it's very possible right now that we could wake up, a week from now when we're talking with Thaddeus, there could be no Communist Party left. There could have a China in chaos. Now, I'm not saying that will happen, but I'm saying that could happen because right now we have an issue of confidence. People don't have it in the Communist Party, and that is the underlying problem for them. They have to keep this market up. They can't do that. And so, therefore, the inevitable conclusion is that they are at extreme jeopardy and risk.
Thaddeus?
Gordon, is there any indication that if this does come to pass, either in the short term or, as I believe, eventually, that the communist regime implodes, is Washington prepared for that eventuality so that it will not repeat the mistakes that it made in post-communist Russia?
Well, absolutely not. They're not prepared in Washington because, our intelligence community from very early on said Xi Jinping had quickly consolidated control. And after that, we have seen all the elements of disunity, and the intelligence assessments don't change. So essentially, you have a Washington that is invested in China's success and has not really thought of the consequences of what can go terribly wrong.
So, Gordon, if I can I just emphasize that point? I'm sorry to interrupt you, but I just want to make it clear. Washington, the State Department, the administrations, up to this one, including this one, have a vested interest in the perpetuation of a nuclear-armed communist dictatorship in China.
Yes, and one that is trying to undermine U.S. values. And by the way, since we're talking about the stock market, this is a Communist Party that across its main media platforms ran a piece just 2 or 3 days ago blaming the United States for the fall in the Chinese stock market, which is absolutely ludicrous. But, we pay billions for our intelligence community, and we have very many fine intelligence analysts. But when their assessments are sort of put into consensus estimates that are then circulated around the intelligence community, they come up with garbage. And that's what we're seeing right now, John and Thaddeus. We are seeing situations in China that our intelligence community didn't predict. I'm sure a lot of the individual people in the IC did see it, but that's the problem that we have now in Washington, essentially that we have an intelligence apparatus that cannot deliver real intelligence.
The markets in Europe are well financed and sophisticated, and there is some promise now that the earnings season will be better in Europe now that the Greek problem is cauterized, if not solved. The U.S. markets are high. We're trading sideways. There's no integration, Gordon, of the FA market in Shanghai with the rest of us. So I'll ask the cynical question. What does it matter if it fails, Gordon? It's their problem. And by the way, we know the whole system doesn't work anyway.
Right. I mean, as you pointed out, the Shanghai market is not very well connected to the rest of the world. They have something called the Shanghai-Hong Kong Connect, which allows foreign investors to buy A shares, which are generally available only to Chinese citizens. But there's very few connections. But nonetheless, this is not a matter of what's real on the ground. This is an issue of essentially confidence of foreigners in China. And when the Chinese market fails, as it has been and trying to fail, essentially what you have is panic around the world. And that's why we saw commodity prices and stock values outside of China fall yesterday in reaction to what happened in Beijing and Shanghai and Shenzhen. So this is a real problem right now in the sense that China can affect the rest of the world, even though its markets are technically not very well connected to global markets.
Thaddeus?
Gordon, in terms of the actual production of goods, the flight to low-cost countries, obviously Communist China benefited from that. Should this market implode, should this boomtown go bust, where do we see capital flight going?
Vietnam, Bangladesh, India, and also to a country called the United States of America. We are going to see we're already seeing lots of Chinese capital come into the U.S. For the last 12 months, the amount of capital outflow, which includes capital flight, was like $800 billion. And by the way, John, Shanghai just opened and the index is now down.
Yes, I'm going to watch this all night, Gordon. But Thaddeus, I want to draw you out on this too. The obvious thing to restate is that the Chinese Communist Party is a tyranny, and it has its boot on the neck of the Chinese people. However, the puzzle here, Thaddeus, does this connect to the American public? Is it paying attention? What's your sense of that, Thaddeus?
I don't think it connects directly in terms of what the market does or doesn't do, but I do think Americans instinctively understand that the communist Chinese regime is not our friend. I think that in places like the Midwest, where you've had unfair predatory trade practices from the communist regime, people here are not going to be rooting for the continuation of those through the continuation of their markets. But I think overall, like I watched with my generation being butchered in Tiananmen Square, the indelible image of that party outside of the corporate elite is that a communist regime that kills its own people and treats them as peons, peasants, and dirt is not a friend of the people of the United States.
Gordon, I'm looking at the opening in Shanghai right now. It's definitely not reporting to me accurately. It says this can't be true, Gordon. Minus 4% at the open. Is that possible, Gordon? Am I seeing this correctly?
That's correct. That is correct. It's down 4%.
So the government's not moving. Is it frozen, Gordon? They've seen this for coming for 24 hours.
John, yeah, they should be doing something according to their own logic. But the general pattern in the last 3 or 4 weeks is that the markets will open down and that eventually you'll see the rescue in the latter part of the trading session in the afternoon. That's when Beijing comes in and raises the indices. So we probably will see that again today. What this says is that the markets want to go down.
Gordon Chang, Forbes.com. He's in Seoul, South Korea, where all eyes are trained on the Shanghai Composite. All of Asia's watching this because money moves. Money goes where it's treated best. And right now, that's not the People's Republic of China. Thaddeus McCotter, WJR, the great voice of the Great Lakes. Trees grow to heaven. Nope. I'm John Batchelor.